What do you think the year ahead holds for the price of Tesla stock? Many anticipate that Tesla's overall performance will improve significantly in 2023. In fact, prominent investor Cathie is confident that Tesla stock will double this year. It goes without saying that you would not want to miss this information. This is a once-in-a-century opportunity. In a December interview, Cathie stated, "We have an incredible amount of fear in the market, and that actually is the best time to average into these markets." Wood claims that because used automobile prices have dropped by 14%. Year over year, inflation will decline and innovation will play a role in that. Wood also discussed the genuinely disruptive innovation platforms that ARK has focused its study on. This covers blockchain technology, robots, energy storage, artificial intelligence, and gene sequencing. All of these, according to Wood, have a deflationary quality too. We're becoming more confident in it, which should lead to a surge in innovative goods and services. Wood went on to say that in regards to the buildup of inventories and the drop in commodity prices, they were in fact correct. Normally, I believe the market would have responded by now. The market is waiting for the Federal Reserve. And according to Wood, we believe that in 2023, the Fed will first change its language and then its actions. Notably, the Fed has increased interest rates multiple times in the last year, which has had a significant impact on market equities generally and Tesla specifically. In terms of our tactics, we focus on our highest conviction names during downturns. We have been doing this for almost 2 years, and history suggests that this concentration strategy works very well in the ensuing rebounds, which is why we believe this one will be very strong, said Wood. Additionally, she said that 2022 has been the most difficult year of her career, making it worse than the years 2008 to 2009, which are regarded by many investors as the most tough years of their lives. That conveys a lot. Undoubtedly, 2022 has presented numerous challenges, not just for Tesla, but also for Cathie Wood's ARK Invest and other companies. Wood asserted that the energy industry is the only item that succeeded, despite the fact that this year may have been challenging by all measures. It's up nearly 50%, and a lot of people ask us why, given how well it's doing. We don't. Diversify into the energy business. We believe it will stop working, which is why, according to Wood, we believe that demand destruction has already begun, and if our forecast for electric vehicles and autonomous taxi platforms proves accurate, then oil demand could decline by approximately 30%, 3 million barrels per day over the next 5 to 10 years. Wood gave a brief response when asked why she continued to purchase more Tesla shares throughout the downturn, despite the fact that the stock's price had dropped further and its performance had deteriorated due to interest rate fluctuations and price fluctuations. Inflation, we think, is the right leading signal, and it has peaked. Almost all measures of inflation have peaked, including the inflation rate the speaker stated. According to Wood, a significant portion of those indicators peaked in the first or second quarter of 2022, specifically in March or June of the previous year. That's usually a positive thing for innovation, says Wood, but according to Wood, the market is extremely nervous and has been frightened by the fastest ever rise in interest rates. Interest rates have never increased by 18 times in a single year. It has really terrified the market, and I think that the fear is palpable. Wood went on to explain that this level of capital on the sidelines hasn't been seen in the US since 2006 or possibly even 2001. Based on recent polls of fund managers and advisors conducted by Bank of America, I am aware that the same survey indicates that the put-to-call ratio, that is, the proportion of short puts to long calls in the US market, is currently 1.5, the highest level since 2001, Wood added. I recall that we were unstoppable in the late 20s and early 21s. At the time, everything we said was gospel, and I knew it wasn't right. I seem to have said, keep some powder dry at the time. One keeps the powder dry for these occasions or by averaging down over a time like this, according to Wood. She continued by saying that it appeared as though the late 90s had ended last year. Tech stock appreciation increased irrationally in the late 1990s, and this was incorrect. According to Wood, the technologies were not available, and if they were, the costs would have been prohibitively exorbitant. Positively, Wood stated that 5 innovation platforms are currently developing concurrently in the United States. The seeds for all of them were sown during the 20 years that culminated in the ITA and telecom boom, and this has never happened in history. Many investors first heard about the concept of exponential growth during the IAT and telecom bubble, and many fell in love with the idea. However, Wood added the issue was that the technologies weren't ready back then, and if they were, the costs were way too high. Wood went on to say that the cloud didn't exist until 2026 with AWS, and that deep learning wasn't used until 2012 to provide the major advances in artificial intelligence. In terms of DNA sequencing, it took $2.7 billion and 13 years of processing power to sequence the first entire human genome, which was the genome of a single person. Back in 2003, the price would still have been too high, even if it had dropped by 75% the next year. Considering that, the cost of a single person's genome has decreased from $2.7 billion to $500 today, with only a few hours of processing time required. Indeed, according to Illumina and Altima, there's a good chance it will reach 100 or 200 by the following year. Thus, we think we're now primed for action. The costs are sufficiently low, and the technologies are ready. That's crucial. Wood adds. What are these platforms that Cathie Wood is mentioning now that are changing concurrently with time? The first is DNA sequencing, which is currently known as multi-mix sequencing since it now encompasses methylation, proteins, and RNA in addition to DNA. It's tremendously exciting despite being really complicated. These discoveries will enable us to cure sickness. In fact, in the past week alone, we have already experienced one significant breakthrough, according to Wood. Wood further referred to this concept as robotics. She claims that the price of industrial robots is falling dramatically. There is a labor shortage here. Problems are solved through innovation. Robotics are in high demand right now, according to Wood. Another thing Cathie Wood mentioned is energy storage. She claims that consumers are becoming more interested in innovation. Wood stated that the increase in oil prices is not solely due to the conflict between Russia and Ukraine, but also, since these vehicles have improved and are now more ecologically friendly, artificial intelligence is an additional one. Even to us, the advances made in AI today are astounding, I must say. We are currently attempting to look as far into the future as we can, and within the last 6 months to a year, we have witnessed advances that we had anticipated would take place in 5 or 10 years, according to Wood. Cathie Wood's final evolutionary creation was the computer program ChatGPT, which was introduced by OpenAI in November 2022. It is developed using both supervised and reinforcement learning methods, and it is based on OpenAI's GPT-3.5 family of big language models. 3 of the 5 continuously developing advancements that Cathie Wood discussed today are represented by Tesla robotics, artificial intelligence, and energy storage. Many people, including Cathie Wood herself, are therefore upbeat about the company's future. Analysts predict that 1.8 million to 1.9 million Tesla vehicles will be delivered in 2023, a 40% increase from the roughly 1.3 million vehicles in 2022. Achieving the 2023 delivery targets will be crucial in persuading investors that the 2023 earnings projection is accurate and that Tesla's shares may have been oversold in the previous year. Wall Street anticipates 35 to 40% growth in Tesla deliveries in 2023, despite the fact that demand concerns have many investors concerned about the company's high market price. Although it may be too soon to predict how 2023 will pan out for Tesla stock, investors can only hope for a notable improvement over the previous year. For more, be sure to subscribe to Tesla stock.